Brookfield Asset Management is Brett's first idea. You're not concerned that so many analysts follow it, so many money managers, that it's hard to see value. You know what I mean? Surface value.
To have an edge.
Yeah,
absolutely. From our perspective, I think we've talked about it before, but there's some benefits to being in the private markets. And even though this is a Canadian name that a lot of people do own, if you look over time, it's done quite well. There is absolutely volatility through, the ups and downs in the economy. Mm-hmm. But it's a name that we've held and continue to hold going forward. The interesting thing with Brookfield right now is they've made some announcements, and before year end, they're going to split Brookfield Asset Management into two companies. So there's going to be Brookfield Corporation, which will be the balance sheet of Brookfield that they've been investing off as they have for all these years. And then there's a piece of Brookfield which will actually be called Asset Management. It will retain the BAM ticker, and that's going to be the group that invests third-party capital. So there's pension funds all around the world, institutional money that has come into Brookfield, and they're investing that into infrastructure, into real estate, into different asset classes. Mm-hmm. That is going to be a much smoother profile of income coming in because it's fee-related earnings. They call it FRE, fee-related earnings. So there's going to be an amount or a charge that goes on the capital on a recurring basis, mm-hmm. and they have about $125 billion of dry powder to deploy over the next little bit.
125 billion.
Yeah, it's significant. And if you look at the growth plans for what they're going to try to do going forward in terms of attracting more capital, they're talking about 400 billion in 10 years. So that's the Brookfield Asset Management side that's going to have a smoother return profile and will likely be, with a reasonable dividend yield. The other side is going to be Brookfield Corporation, which is going to trade on the ticker BN, and that's going to be more lumpy. And that's, part of the reason why they're doing this is they're trying to pull apart the fact that there is this lumpy return profile from when they sell things versus the consistent return from the fees that they're generating.
Last week, there was a story that Brookfield Asset Management had acquired the copyrights to Whitney Houston's songs. Yes. How Will I Know When I Want to Dance with Somebody?
Right. Yeah. They're into everything. They're into battery. They're into nuclear. They have music royalties. Like it's one of those companies where through all of the different arms that they've done an exceptional job of finding where assets are mispriced, independent of what the asset is. They go in, they find it, and then they can realize value on it.
Alimentation Couche-Tard, we're expecting their numbers this evening.
Tonight, yep.
You like the look of them?
Yep. So this is, one of the Canadian names that's actually becoming more well-known around the world. I put it in a bucket with Constellation Software, where I have friends in the U.S. and friends in Europe, and they're asking questions about what is this Couche-Tard, as if it's a new company that they haven't heard of before.
Yeah.
So they've done exceptionally well over the last 5 years. Free cash flow has grown at about 15% per year. Dividends have grown about 22% per year. They've gone through some sort of we'll call it ownership changes in terms of the special voting shares and who has what rights.
I think the family just basically gave up the voting rights.
Yes, that's right. So now it's a much more investor-friendly stock, which we like always. And going forward, I think if we do head into a recession, and I know there's debate as to whether we get there or not, they have a growing private label group of brands internally. So when people are thinking and becoming more cost-conscious, it's easier to go and buy some food at the local gas station or the local convenience store than maybe going out to a fancy restaurant. Mm-hmm. The other thing with them that I think, they had that blip with the Carrefour acquisition that they tried to buy the French grocery chain.
People weren't crazy about it.
Yeah, and the regulators weren't either. It didn't quite work. But the CEO, Brian Hanash, he said recently, we've kept our M&A discipline over the last number of years, and what they're seeing now is that the private equity sponsored funds, all the money that was awash in the space before is receding, and valuations are coming down. So it's likely that they're going to be benefiting from the fact that they didn't go out and they didn't overpay over the last couple of years with some acquisitions that they can make going forward. Yeah.
A friend of mine ate a Circle K burger, though, the other day, and he wasn't impressed.
Right.
But they can't all be winners,
yes.
I guess.
Yeah. I mean, they call it fast, fresh food, so maybe a burger's not necessarily one to try.
My friend is pretty fussy as
right.
well, anyway.
Right.
Finally, Reckitt Benckiser.
Yes.
What are these guys all about?
Yeah, so this would be like a mini Unilever or a mini P&G. They're a consumer packaged goods company. They have a nutrition side. They have sort of a healthcare side. They make Lysol.
Oh, okay.
Enfamil, baby formula.
Yeah.
And a bunch of other sort of different brands that they've cobbled together over time. This is a company that they made a fairly bad acquisition, I'd say, back in 2019 of a baby food company that had some issues with distribution in China. And so that has hampered the stock for the last little bit, but they've sort of rounded the corner on that. Revenue's growing almost 10%, operating margins up 3%, free cash flow has grown 40% over the last year. So they've come around, and they have a portfolio of brands that can do well going forward. So again, if we're trying to be defensive, having a name like this in the portfolio does make sense.
What about the Canadian food retailers, Loblaw and Metro? Do they show up as decent defensive plays for you?
Yeah, so we hold Metro. That would be the one that we have in our portfolio. There's been some scrutiny lately in terms of how much they're extracting out of their customers from an inflationary perspective. So they have to be cognizant of that. But yeah, if we get into tougher times, people are not going to be eating out and spending $100 or $200 a meal. They're going to be substituting for food at the convenience store, food at the gas station, or more food from the groceries and having to cook at home.